Congress is celebrating. They've managed to reach an agreement to avoid what would have been a historical first, a default on our obligations. There is, however, one part of it that spells disaster. The debt limit has been suspended until 2025. Yes, from today until 2025, the Fed can and will most likely print as much money as it wants or perceived to need through with projects and anything else it can do. An important question that Congress seems to be avoiding as to whether or not this move will be good for our retirement savings or our wealth in general. The debt ceiling has been suspended. The debt limit would be suspended until the first quarter of 2025, beyond the 2024 elections. Rather than raising the debt ceiling by a specific dollar amount, Congress just removed that limit altogether. They said it was to avoid political parties from using it as a pawn in the next election. The problem is the freedom that this gives the government to print as much money as it wants. The easiest route to meet our obligations is just to print money. With a debt limit, that's what the government will likely do. However, if governments print money to pay off the national debt, inflation would rise, reducing the value of the money. It goes back simply to supply and demand. Increasing the money supply by, let's say, $32 trillion only introduces $32 trillion more into the economy. It doesn't magically conjure $32 trillion worth of goods. More dollars chasing the same amount of goods would cause prices to spike in a major way. Unless there's an increase in economic activity commensurate to the amount of money that is created, printing money to pay off the debt would make inflation worse. This would lead potentially even to hyperinflation. Hyperinflation quickly erodes the real value of the local currency as the prices of all goods increase. This causes people to minimize their holdings in that currency as they usually switch to a more stable foreign currency. This happened in Germany in 1923. Workers were paid multiple times a day so they could use their wages to buy groceries before prices went up as the day went on. In 2018 in Venezuela, a 5-pound chicken cost 14.6 million bolivars, which is the equivalent of about $2 US. In 2008, Zimbabwe, teachers earned trillions of dollars a month, but a single loaf of bread cost 300 billion. Noble Gold Investments encourages you to protect yourself, your family, and your future. Make sure you have a hedge against this economic disaster. Invest in gold with Noble Gold Investments.